Hey everyone, it's Diggy here from ForexHabits.com. Today it is Friday, the 1st of March 2013. Now, first of all, I want to apologize for having been absent for the last couple of weeks and not having made videos or blog posts. Just been seriously busy with traveling and business and setting up other things. So now I'm back. I like to always look at charts at the end of a month, at the end of a week, and at the end of the day, but preferably the end of the month to set a long-term direction, and then look at shorter time frames to determine the direction within that month, trading with the trend. So we're going to start with some of the US markets, the US indices. This is the NASDAQ chart, and we're going to have a look at the monthly chart, and we're going to see what's going on. Now, for a long time already, I've been expecting markets to drop, and at some point this whole rally from 2008, from that crash bottom, that is going to end, and we are going to head back to at least a 50% retracement or the 100 monthly moving average. So what I want to show you on this chart is a number of things. So this is the NASDAQ monthly. You can see it goes all the way back to like 92, and we had this insane tech bubble kind of thing here. Now, what I want to show you is that firstly, there is a huge divergence on the chart compared to the price action with the RSI. This is a monthly chart, remember. So here the price action made a high and a high RSI, but here the price action made a higher high than this, but the RSI made a lower price action, lower high. So that means this is a negative divergence. You can see here how this goes up while the trend line on the RSI goes down. Now, usually in most situations, I'd say over 80% of the time, the price action will follow in the direction of the divergence of the RSI. So if this were to happen on a shorter time frame, like a daily or 4-hourly or an hourly chart, this would go pretty quickly. Now, of course, this is a monthly chart, so it can take numerous months. It can even take, 6 months before something like this happens. But if this happens, this is going to head significantly lower. Now, the first resistance or support will be the 21, then the 50, and then the 100. So we're going to head down to very likely around the 2000 level, and very probably sometime this year. Maybe we've already had this kind of head and shoulders and we're going to drop down to here. Maybe we're going to go down. For now, it's looking like it does want to go down. Look, the MACD histogram has crossed under the zero line, which is negative. We've got this negative divergence here, and we're kind of getting this stalling kind of price action pattern. So I would not be surprised if this month of March we drop down all the way to the 21 exponential average on the monthly chart, around 2561. Now let's head over to the S&P 500 and let's look at the situation here. This is also a monthly chart going all the way back down. Here we don't have that negative divergence because although the price action is lower now than it was in 2007, the price action is also lower, so that corresponds with that. The MACD histogram is still positive, and we're all still in positive territory with the indicators, with the averages, with the price action. But what we are starting to get is a negative divergence on the RSI for the last, say, year, since 2011, since this top, actually, where we created this high at 1371 about, and the RSI was here, but now we're significantly higher with the price action at 1500, but the RSI is not significantly higher, so that's kind of a non-confirmation. Now there is a chance that we will head higher and kind of head to this triple top area, but maybe also not. The NASDAQ is not looking like that. The Dow Jones is also not looking like that, so we're going to have a look at that just now. This can also drop back significantly. The first support, I'd say, is around 1477, and possibly all the way back down to the 21 average. So now let's look at the Dow Jones. This is a monthly chart of Dow Jones Industrial Average. Now, again, we don't have a negative divergence between 2007 high and current high because the price action is also lower, so that's all fine. But we do, again, just like in the S&P, have a negative divergence with the last, say, a year, since 2011, where we've been making higher highs in the price action, but the RSI has not been making higher highs, and that is kind of starting to be disturbing. Now, there could still be a bit of a rally, but it is just a matter of months, in my opinion, before we are going to start heading down, and quite likely this month we are going to head back down as well in the Dow Jones. Now, let's have a look at currencies, because a lot of the time markets or market indices and currencies tend to move in the same direction. So if we take a look at, this is the British pound versus the US dollar on a monthly chart, you can see since 2009, since we were at that super low of around 135, we had this huge consolidation kind of in a wedge, and last month we broke down straight through it from about 156, and currently we're at 150. Now I think this thing is going to drop down to back to about 143.50, possibly all the way back down to 135 again. As you can see, the MACD histogram has crossed to the downside, something that hasn't happened in the last 3 years. It has crossed to the downside on a monthly chart. The RSI is below the 50 level, which is negative. Slow stochastics have crossed and are pointing to the downside. The price action is below all three moving averages on the monthly chart. And should we even get any sort of rally or pullback this month, it shouldn't go much further than about 153 if it even does that, and is likely going to head a lot lower. Let's have a look at the Euro US dollar, because why not? We just clear these things, and you can see we had this big rally from about 118, I think it was, or 120, 85, 120, 40, and we had this rally for a number of months, last months. Now February was a big down month, and it has dropped down to below all three averages on the monthly chart. These indicators, they are still kind of positive. The RSI is actually below 50, which is not a good sign. The MACD histogram is still above 0, but barely. And the slow stochastics are still, they're above 50, but they're looking like they're closing and wanting to go down. So what I would say is that as long as euro dollar stays below 131.50 for this month, it is going to head lower. It's possibly going to go back to, I don't know, maybe 128, 127.50. And it's very possible that if this breaks and we get a bit of consolidation, that over the next months we are going to head lower, and we're going to go back to 120 and sub 120. Euro US dollar, this is the last one we are going to have a look at for today. Euro Japanese yen. And we've had this massive rally from the 96 level, or I think 94, I'm not sure, let me see. Yeah, 94, we had this massive rally to all the way to almost 128, and that is huge. That is like 32 cents, which is like huge if you could have caught that move, because we had this big consolidation and grinding kind of downwards move since 2008. Now this is a very good example of how divergences with price action and RSI play out. You can see there was this huge divergence that was starting to form over the last 4 years, where the price action was just grinding lower and lower, but the RSI was not confirming it, because every time the price action went lower, the RSI made a higher bottom, and eventually that just kind of turned out how the RSI direction was. So the price action follows in the direction of the RSI divergence, and eventually it shot up and you get these huge kind of moves. Now once again, February was a pullback move, and it is very likely that this month we're going to head back to about the 50 exponential moving average on the monthly chart, which is around 116.50. We should get there. Upside maximum should be about 123.50. Shouldn't go above there. If it does go above there, then the trend changes and it goes to the upside, but that should be the maximum. I actually don't expect it to get above current levels of around 121.50 and just head straight towards this like 116.50, 116 level. So that is kind of the outlook for the month. We are looking to the downside for March, so any short-term trades that we do take would be looking for the downside, and you'd look on weekly and daily charts kind of for entry points. At the moment, personally, I'm currently short the NASDAQ 500 at around 27.35, which is current levels, and I'm going to hold that as long as it doesn't go above 27.50. I'm going to keep that short, and I'm probably going to hold it for the whole month because I expect about 100 points to the downside, possibly more. So I hope you all enjoyed this analysis. I'll be back. I'll be posting more regular analysis. Keep following me. Check out the site, forexhabits.com. Subscribe to email updates. Subscribe to this YouTube channel. Share it with your friends. And if you need advice on technical analysis on trading, I do offer personal coaching. So send me an email, contact@forexhabits.com, and I'll respond to you within 24 hours. Cheers.